Guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hello, welcome to Stocks Never Trading. My name is Ron, my partner is Dave. Welcome, guys. It's 11 a.m. Eastern. It's a beautiful Friday, June 21st. Thank you guys for all joining. I appreciate everybody. Plan for today. We're going to go for 2 hours till 1 p.m. Eastern. Ron is probably going to be talking a little fast today because we've got a lot to go over. So we're going to get started with number one. I hope everyone is having a great week. We were just talking in the Zoom just right before we started here. If you've had a good week already, these are the days, Fridays, you have to take very, very, very serious to be a consistent trader. Fridays really tend to affect the trader psychology because Friday we want to make that money. It's the weekend. We want to get that money and enjoy the weekend, and we tend to forget discipline on Fridays. We tend to over leverage. We tend to risk too much. We're only concentrated on making money. If we've had a shitty week and we're already losing already going into Friday, main thing on our mind is we got to get back what we lost this week, and we got to do it all on Friday because it's going to be the weekend and then we can start again fresh. So this is the hardest day to navigate around, is a Friday in the markets. It was the hardest day for me to learn how to trade this day. It was so difficult for me to learn on Fridays. Sometimes it was maybe not to take a trade on Friday and come back the next week, whether I was doing good or whether I was having a difficult week. It took me a long time to figure this out. So I hope some of you guys are learning that Fridays, it's a completely different day from Monday, Tuesday, Wednesday, Thursday. Not just because of the volume, not just because of that. It's the psychology going into the weekend. I don't know what it is with traders, myself included, why it kind of destroys our discipline. So this is something that we need to work on, all of us, including myself, including you guys, all of us. Doesn't matter if you're scalping the markets on a Friday. It doesn't matter if you're intraday trading. It doesn't matter if you're doing swing positioning. It doesn't matter. Friday is a tough day to trade. That's why I have a rule. If I kind of get to Friday and I hit kind of my weekly goal, I tend to trade less on a Friday or avoid it altogether and do other things. Keep busy on Fridays. Don't make Friday your catch-up day. If you had a bad Wednesday, Thursday, and now you want to get caught up on a Friday. Friday's not your day to get caught up. Friday's your day that's going to probably destroy you, and you're going to lose even more. So maybe analyze the markets, do higher time frame setups, and then go into next week, Monday, Tuesday. That might be where you get caught up. But that's just me, my personal opinion. That's why I like to have conversations with you guys. You guys tell me what works for you. You guys tell me what is difficult for you guys, and then we work together as a team to figure this out. Okay. So number one, thank you guys, everyone on Zoom for joining. I appreciate all of you guys. I know it's been a busy day. We had live London with Shahab, with Dave in New York, and then now myself over here in Post. So I know it's a long day for you guys, but just I appreciate all of you guys putting in the time, effort into these markets. So welcome. Dale, good morning. Emmanuel, thank you for joining. I appreciate you, bro. Giuseppe, thank you for joining, brother. Yeah, Mike, we talked about that. Okay, things we can work on. Emmanuel, congratulations, bro. I appreciate everything you're doing, and it made 1,000 today, 2%, and you're here to learn, not to trade. I like that takes discipline. Another thing I do, Emmanuel, too. If you're up 2% and you want to continue to trade and get a feel of the market and get emotionally involved, the 2% that you've already secured, maybe risk 0.5, 0.3 if you are going to continue to trade today. And then if you get stopped out at that 0.3 or 0, you still have secured 1.5 and you can still walk away with a smile. But don't go risking that entire 2% to try and double up and get 4%. Because if you lose that 2%, you guys know the cycle. Then we go back to break even. Then we got to get back that 2% we had, and we can't stop trading. Then we go negative 2%. Then now we're in drawdown, and then the whole cycle starts. And so once you learn how to conquer this, then you're going to become a consistent and profitable trader. That's the secret. That's the secret, guys. Technicals is not the secret. Fundamentals is not the secret. This is the secret to being a consistent trader, is the discipline and the risk management and conquering the psychology. That's what it is. That's what it all comes down to. And everybody learns at a different pace, okay? Welcome, Warren. V, no, you don't want me recording singing the national anthem when I'm at the game. Oh, Euros, okay. So Slovakia just they had it secured. They could have got through that group, and Ukraine came back and beat them 2-1. Right now we got what is it? Poland and who's playing right now? Poland and sorry, Poland and Austria, and then the later game is Netherlands and France. Yeah, I hope you guys are all enjoying the Euros. I'll be there Monday night, Albania and Spain in Germany. So just to keep going over, I have to finish this call around 1 at the latest. I got a lot of government things I got to do. I got to go pick up my son's passport. They closed today and will be closed for the weekend. I got to go exchange some currencies and things like that. Am I sharing the wrong screen, guys? One second, guys. I gotta get my kids stop playing with this. YouTube, is it on the correct screen now? I know Zoom, you guys, I'm on the right screen for you guys. Yeah, you guys see TradingView Bookmap? Okay, are you guys good now? Okay, on YouTube? Okay, I believe we got it. Okay, we're good. Let's go. Okay, let's stop wasting time here. We're going to go through the news real quick. Friday news. Okay, so we were just talking about the psychology of a Friday. Now let's continue. You see, Friday, we've been talking about this. A lot of red folders, flash manufacturing across the board, starting in London. We started pre-London. Red folder, retail sales month over month came out pretty good, the actual number. Moving into London now, 3 a.m., 3:15. We have French flash manufacturing, French flash services came out. Red, not so good over here. Then we had Germany, German flash manufacturing, German flash services, red, not so good. We had some more European flash manufacturing, flash services, red. Then we moved into the UK, British flash manufacturing, flash services, red, not too great. Then we moved into 8:30, some Canadian news over here. But this is the one North American market right over here. This is Wall Street. Wall Street opens at 9:30, 9:45. So we had the two US red folders, flash manufacturing and flash services. So these numbers over here, 51.7, 51.2, 53.5, 43.4. What do these mean? What do they represent? If you click on the folder, you'll get a little bit of an insight as to what these are. It's kind of a gauge. Remember that psychological 50%. Do we want to be above or below? What does this mean? So I can see the last services flash manufacturing over here was May 23 in the US. They were forecasting 50% flat from the previous, and they actually came out 0.9%, 0.9 points above to 50.9. So what is this? It's a level of diffusion index based on surveyed purchasing managers in the manufacturing industry. Actual greater than forecast is good for the US currency. Above, this is what I want to note. So this is, guys, pay attention to this, because a lot of people ask, Ron, what does this mean? How do they do this? Where does the US dollar move, up or down? Right here. So this is a gauge. Okay, so it's above 50. Okay, think about 50%, or 50 points, whatever you want to look at it. Above 50 indicates industry expansion. Okay, that's good for the industry. Below indicates contraction. Contraction is when it's getting tighter. It's not expanding. Okay, the industry is not growing. There are two versions of this report released about a week apart, flash and final. The flash release, this is the flash release, which is the source first reported in 2012, is the earliest and thus tends to have the most impact. Okay, so why do traders, investors even care about this? It's a leading indicator of economic health. Business react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Okay, so above 50 is good for the US dollar. If you look at DXY and then you see around 9:45 when they released this, what do you see on the DXY? I can see it was a big bullish 5-minute candle that hit right into resistance, then it pulled back, and now we have the US dollar breaking out right now currently of that resistance. So above 50 is good for the dollar. That's what we see here. And then the next reading was our flash services PMI. 55.1, so extremely good for the US dollar according to these folders. Okay, so everyone was asking, Ron, why did gold drop? Why is gold continuing to drop? Because of these folders that came out, and they're seeing an increased demand in the US dollar, so therefore we're seeing a little bit of selling of gold, and also the markets are cooling off on a Friday, not just according to this news, but also Nvidia is getting a little bit of a haircut today. Nvidia's we'll look at Nvidia too also, but it's getting a little bit of a haircut. That doesn't mean Nvidia is crashing right now, but it needs to cool off and pull back a little bit, because it was a supernova where it was just taking off and had no pullback. So earnings today, we've got CarMax that was this morning. FactSet and Uranda. Like, I don't even know this company. I've never even heard of it. Am I going to get too involved in this? No. I look at the big names that I'm familiar with and the ones that will move the market. I don't think CarMax is going to really move the market. Unless you're individually trading this security with options, then you need to know that security, okay? So after hours, I don't even think we have anything. Friday, normally after hours are really slow on Fridays. We just have one corporation. What I like to do now, well, I do it on weekends, but I'll do it real quick with you guys, is I click on calendar right now and I look at Monday, Tuesday, Wednesday, Thursday, and Friday of next week. I kind of look at forward forecast, so I can see Monday is going to be a light day also with earnings. So there's only one corporation before earnings, 2 after close. Tuesday, pretty light day as well. 3 before open, 3 after close. Wednesday, 4 corporations before open, 13 after close. So it starts to get a little bit busy Wednesday after hours, and then Thursday we got 7 before open, 5 after close. And then what I do is I click on each individual day to highlight which are the big companies. Like, for example, I don't know any companies that are reporting right now. If I click on the day, maybe I'm going to see, for example, Apple has earnings after hours. I'm not saying they do, but I'm just saying. Then I would really focus on Tuesday after hours, because Apple can move the markets. So that's what I would be focusing on. Then when I see that, this is what I do on weekends. Then if I knew Apple was having earnings Tuesday after hours, then I would start to see what type of move the market would engineer going into Apple's earnings on Tuesday. I'd like to see how they open up the market Sunday, how they move into Monday, how they move into Tuesday, then we get to Wednesday or Apple's earnings. So that's what I like to see, the bigger, higher time frame engineered moves, and then we can intraday trade or we can scalp the smaller time frames. Okay, so make sure you're doing this. Do this as well with Forex Factory. Like right now we finished. Go into Forex Factory and then look at what news do you have next week. Monday, go through Tuesday, go through Wednesday, go through Thursday, go through Friday, and start making notes of the most important days that are significant to you and where we'll have an impact in the markets. Okay. Pinned at the top of YouTube, thank you guys for all joining on this Friday. We appreciate you guys. Pinned at the top of YouTube is this free Telegram channel. Please subscribe to this, get in here. We do give you guys lots of benefits in here. Here's a trade idea. A buy signal on gold above 23.35. We'll take a look at it. We'll do a top-down analysis. We'll mark up that zone and we'll see what's going on there. Some before and afters of our SST Scalper Pro signals that we send out, how to utilize these, how to trade with these. This is our scheduling and all of our links for our YouTube channels, the trades that we take, recaps of Dave's session in Wall Street with the snipers, recaps of Shahab's sessions in London, and everything we do here, okay? This is our website, guys, stocksnipertrading.com, our YouTube channel. We appreciate all the likes and subscribes. Thank you to the team from Lorenzo Trading that came and has subscribed. We appreciate you guys. I'd like to collaborate with Lorenzo and do something amazing for both of our communities. He's an amazing guy. I watched his stream the other day, and he's very knowledgeable about the markets and everything. And I like the way how he's out there helping retail traders. It's awesome. So that's shout outs to Lorenzo. Thank you for doing that for the community, and keep it up. And over here, guys. This Yahoo Finance, Bloomberg, anything you guys want to use, interactive brokers. Like right now, you can have your little watch list of what you're watching. I was just talking about Nvidia getting a little bit of a haircut today. They're down 3%, which was like $100 billion hit on their market cap. I'm sure that Nvidia will recover, but this is good to look at because I'm looking to buy some pullbacks on Nvidia. Kind of when it dropped to, when it did the 10-to-1 split, came to 120, there was an initial drop to 117. You had to be real quick or have a pending order to hit that, and then from there it went to 125, went to 130, 135 to 140, and now we're pulling back a little bit. So if you're looking to start a position, this is what you should be watching. When these corporations take some haircuts, look where the next support levels are and everything in the markets, and anything in the markets that you're looking for. Meta, KeyBank raises price target on an ad growth. There's lots going on here. Stock market today, Wall Street drifts as Nvidia loses some more momentum. So that's what I was talking about. Yeah, right here. Nvidia stock continues to cool off from its startling supernova run. When we have these supernovas, this is where some securities take off and they don't come back. So this Nvidia is considered to be a supernova right now. It's from, look at its charts from 2020. This thing was trading at $50 a share. Okay, so let's go to our charts now. Okay, so Bookmap over here, guys. I'm going to ask you guys a question. You guys are getting more familiar with this depth of market over here. Bookmap, these are our offers above us. These are our bids. I'm on gold, GC. This is the contract Q. We're below the VWAP right now. We're in 15-minute time slices. Here's 10:15, 10:30, 10:45, 11. Here's the start of 11:15 right now. This is called a heat map behind us. So some traders like to show extreme heat. Some traders like to reduce the heat. This is where the toggle where I can affect the volume with the heat. So I'm going to put it on extreme. Do you guys like this? Like where I can, if you go all the way to the left, you see how it's black. I have no heat behind me. Some traders like this. It's easier on the eyes. Right now, gold is dropping right now as I'm speaking. I can now start to add heat. And I can see that there was liquidity here that was coming in, but just broke through. I can see a little bit of liquidity above and below. I personally like it like right in the middle here. I don't like it too much to the extreme right. I don't like it where I can't see anything. So I like to keep it like this, and then I can see my heat levels. If you guys are looking at this, and you guys can download the demo here for free on Bookmap, practice with Bitcoin, and then just get familiar with what your eyes like to see. I can also affect it up here. I can make it look like this, you know, like that doesn't really tell me too much. So I like to kind of just cool it down just a little bit, and so it will highlight the significant liquidity levels, okay? And then the bubbles, also the transactions, you can affect the transactions. You can make them look really, really big. You can make them look a little smaller. That's all personal preference. So I like to keep it here personally. Okay. And our cumulative volume delta is negative right now. We just broke. It's probably going to come back up to balance. We'll see if we can come back up. But let's get onto gold's charts, because right now gold is moving. So it's continuing to push down. So remember what I was talking about, the 9:45 news right here. So before 9:20, Wall Street gold was dropping. See 50% of our 9:45 kind of 9:50 candle. If you kind of mark that zone, it was still pushing below. It came back up right into there again. Now they're dropping, and now they're really pushing it down again. So we've got lower lows, lower lows. We've got right now, like it's showing us a little bit of divergence, bullish divergence. The RSI indicator is coming up, saying that the strength is picking up, but the price keeps dropping. So they might be keep dropping it to grab that liquidity, to grab that. If it flips and turns up, it could just be a counter pullback until we get some green volume starting to close above structure. Okay, so I'm going to break it down from the higher time frame, from the daily, hourly, 5 minutes. If you guys are trading right now, if you're in the trades, gold is physically selling. We can see it. So careful with your buys until we get some closing volume above and gives us a confirmation that maybe the trend is going to reverse. Right now it's still pushing down. Highlight, like if you see the 50% zones, even right here, there was a little bit of support that was built right here at 23.29, 23.30. If I was just to draw a line right across here, we're still below that line. So maybe I got to see if gold will close above 23.30, 31, maybe to start that support level again and then start the depth of market. But let's go to the daily. Let's get into this now quickly, so we don't miss much. Look at today's daily candle. Okay, it's a bearish engulfing candle. We've already engulfed all of yesterday's green volume. Okay, so those quick little key zones we've been doing all week. I'm going to place a green box right here. If I wasn't on the call with you guys, my chart would already have this green box from every single day trading. I would not have erased this because we still haven't came down to it. Maybe now we got a big bearish engulfing candle coming down Friday. If it closes engulfed, maybe next week gold is going to revisit this area. Okay, and then our bigger area of supply up here I had all week was over here. Bring it across. We maybe we were going to come up here today. See, yesterday we had some really nice buying volume where we closed near the high, and then they just opened today, and we just kind of just made a little bit of a higher high, but we're still have that big red NFP candle still pushing the market down. So we have this big candle coming down now on the daily. So another critical zone is right here, 50% of NFP, and you see we had 1, 2, 3, 4, 5, 6, 7, 8 days trading into it where it was pushing the market down right here. Now, I'm drawing this zone across because I'm getting my charts ready for next week too. I'm not just trading this afternoon. I'm getting ready for next week. So if we close, look at it. It's a bearish engulfing candle. This yesterday could have been a fake out to the high, and now they're really bringing it back down. So this candle is going to close in 5.5 hours. We still have a lot of time. So whether you're trading or not this afternoon, make sure you pay attention to where the gold candle is going to close today, because this could shape up how we move next week. If we close below here, then if we pull back green, we're going to pull back maybe into this zone, and then they continue dropping it down. We might be revisiting this green box. But if they bring it back up this afternoon and close it back around here, maybe then next week we're going to move bullish back up and test these highs. So now I place yellow lines right away. Critical yellow line is right here. This is where we closed yesterday and where we opened today, 23.60. Yesterday on that 3-minute scalping session, after the call, it came and it hit the target of 23.60 and then rejected from there. So if you guys were still in that trade with me yesterday, you should have hit target at 23.60. Did anybody stay in that trade to hit that 23.60 target? And then where did I get that target from? It was that hourly 50%, and that's how I knew exactly if it was going to come up to 23.60. So that's why you got to make a decision there, because if you didn't, it came right into 23.60, 61 and then dropped. There it is. Like I can see yesterday's daily candle came right up through there and then dropped. Guys on YouTube, can you guys hear me? No interaction with you guys over here. And you guys on Zoom, yes, Juanito, thank you for reminding me. Quadruple witching tonight. Yeah, so that's options, guys. Quadruple witching, so careful. There's going to be lots of volatility. Okay, so today clearly is a bearish daily candle. If you think today is bullish, we're going to have a conversation and I'm going to ask you why. If we're talking about the overall, yes, then we're bullish. Like if we talk about this rally, that's very bullish. And then pull back, still higher low. We made a new higher high, our all-time high of gold, 24.50. Then it pulled right back down into here, another like double bottom, still holding that higher low support. And we came right back up. But now we're making lower highs, and lower highs. And now we have a big, so This week, it's it was coming up strong, but now today they're rejecting it when right at the end of the week. Okay, so again, how do market makers engineer these moves? You know, they faked us out yesterday, and then like looking to take that buy right back up there, and then they drop it and they pound it down with news. So big bearish candle. Let's now highlight what happened. So we opened. That's our high of the day, purple line up there. I don't think we're going to revisit our high of the day again today. I still put a purple line to show you guys. My purple line always represents the high of the day. I know we got up to 23.68 today, and then they dropped it down. I have an important yellow point of interest line right here where we closed yesterday and where we opened today. We're nowhere near that. Now what I got to do is I got to kind of look at 50% of the volume in the candle right now. Open, there's the bottom of the volume. 50% is right here. It's at the top of my red box. So if I want, like when I do this myself, I know that this is a zone. So I know that 2341 is pretty much represents half of the candle right now. But for others on the call, what I do is, if you need to, draw like another yellow line right here, 2341, and put it as a point of interest. If we do come back up, if it comes up, catches a wick, and it comes back up green, green, green today, then right there, I expect it get rejected. Like I'm telling you right now, I expect it to get rejected right here, and then this volume that's still above us will continue to absorb those buyers and continue to push it down, okay? However, if the buyers prove me wrong, and they push it above here, and they close it above here, then maybe Sunday, Monday, we're going to start bullish and come back up here, and then we're going to see some barcoding, green, red, green. Okay, but right now it's still pushing down. We push down. Now I can see the bottom wick of our daily candle. So I'm going to put again a line at our wick, and that's our low of the day. So I make it purple. And just make this purple right here. Okay, so purple line at the low of the day. And now I look, 23.23 is our low of the day. We're getting a little bit of support, and then right here, you see that little body right there, the right there, that point of interest, 23.19, and the body and the purple line as a area of reference. What I do is I use the purple line and I box in that body right there, and I draw this box across and I make it green, because this is the volume that could continue to hold the uptrend that we've had in the market right here, where this was a red candle that came all the way down, but then came back up and closed right there. Point of interest, close. And then we opened, point of interest next day. There was no gaps in the market. It was red, 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 red. We broke that low, and then we came right back up to this point of interest, but it was bullish and closed up here. And then we had that little inside bar when the US banks were closed on Wednesday, and then we had that nice extreme bullish move on Thursday. Here's where they hit it up there, so I see it's a new high, but now they're bringing it all the way back down. So if we can hold this, then maybe we might still come back up bullish into our red box. If this breaks down here, and it's kind of like it's still a daily candle impulsively breaking through here, we might have red, 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 and then you see that body right there, the body and that right there, 23.10. I place a yellow line right here to give me a point of interest. I have a few touches right there. I cannot neglect this area. I've got a green candle that came up and kind of pushed and closed right there. Next bar opened, came down, closed above. Look at the retest now. With the volume closing above, we retested that yellow line and pushed up. And then it's right around these wicks, this wick and this wick. So if we continue to break this green box, maybe we're going to come down here, and that's it. Maybe we find a wick there and continue to push up. I can see, again, there's a little bit of a zone below here that's kind of holding. If I need to put another green box and then watch my lower time frames, if they do come in here, then maybe I give the benefit of the doubt that the buyers will step in right here. If they don't, then it may be the bigger box down here. But we have a really red bearish candle coming down. Let's now look at the hourly. Okay, now we can see when the move happened. Exactly. So it kind of pushed. This is what we were trading yesterday. You remember, guys? We were trading. We got into that buy, and then I was looking at 2360. It was right up here. There's our candle that hit it at 2 p.m. We came right up there and we tapped 2360. That was the target, and then it retraced back down. Then it came back up there. We actually used 2360 as a static level, and that's where we closed above it at 8 p.m. That's futures market open. But you see here, if you marked your hourly bodies here at 2365, if you had a white line line going across here, which I normally do. I have a white line I would have seen that it's resistance, then it came back down, closed below, came back up again at this resistance, back down, consolidating. Then they brought it up here 7 a.m. Colmex started to bring it down at 8. Here's the drop. It came back up. Where did the hourly candle come into? 50% of the red hourly candle. Guys, this has got to start getting automatic for you guys, okay? Always think, if you see a candle, a bigger base candle, just place a line and cut it in half. Okay, that's all you got to do, and then start to get familiar with how the volume reacts at that level, and you're going to start getting better and better and better and better. It's a very, very, very psychological level. Like, it's got nothing to do with technicals. It's got nothing to do with fundamentals. It's just the psychology of mathematics. It wants to reverse back to the mean. It always does. That's math. If you guys understand, some of you guys are math teachers. Some of you guys are math professors. You guys know this more than me. So it's very mathematical. It doesn't matter about fundamentals and technicals when you're looking at, like right here, you see this big base candle right here, from the yellow line to the yellow line, this entire zone. Okay, that's a big zone. If I wanted to cut this in half, I cut it in half right now, and I use my naked eye. But sometimes I look at also some price action to left. If I'm looking at it right in half, that's probably where it is in half. Okay, I look at where it opened and where it closed. That's about half of it. If it lines up with a nice psychological number, then I give myself 2 thumbs up. It lines up, I'm at half the zone, and it lines up perfectly with 2350. It doesn't get any more psychological than that. So if we were to have a green move, like right here, it could have came up green, 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 came right into there, and then that supply would have pushed it back down. That's what makes a lower high. However, if it closed above half of that white line and respected it, then that white line would turn into support. Then we would probably have enough momentum to come right back up to that yellow line. That's zone to zone, reading tape. White lines I use for hourly. Yellow I use for daily point of interest, and you guys know my purple lines represent the high of the day or the low of the day. Now, we had that big drop with all the flash services over here at 9:45, right here, continuing 10 o'clock. Look, ignited red candle, push down, take out the low, close below, 50%, and you got 2 wicks there. Did anyone place a white line right here at 50% or at those, like around 23.35 right here? The wick, that represents maybe open, close, about half of it right there. Look at the retest. We came back up green, 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 right into there. It got rejected, new low. Now we're down at our green box. So what I'm thinking is the hourly candles are going to consolidate in this little zone right now, this afternoon. Okay, so I make it neutral, consolidated area. Will we push back up? Possibly, but when we do, remember, this is a big red zone and we have hourly resistance. So we got to get that hourly volume above here, and then to pull back and to hold either here at the white line or at the top of the box. So we create that higher low, and then we can break maybe possibly the yellow, the daily point of interest, and then work our way back up there and then have a little bit of a pullback. However, we could get a pullback, but then maybe we just pull back right back into the supply, and then they keep pushing it down. So this is kind of like the leg 1, what I always talk about. This is leg 1 coming down. We might get a leg 2 coming back up, but then we got to figure out where they established where the neckline is. So yesterday it took us a while to figure it out on those 3-minute candles. Then finally after the call it started to break out. But sometimes these moves take time to develop. That's why you cannot rush a move. It might come back up and then you buy, then you got to expect that they're going to pull it right back down to gather second leg of liquidity. Get that depth of market, get more buyers. Think about it. If you're moving gold, you need volume. You can't just move gold on like maybe one single leg unless it's there's news or something like that that can push it right back up. But maybe we come back down for an official double bottom, that higher low I was talking about. Then maybe we might have the momentum to break through here. But we still have to give the benefit of the doubt that today is bearish. It's bearish on the daily. It's still bearish on the hourly. We maybe can scalp some counter pullbacks. Yes, we can. But overall, it's still bearish. And then you see here a lot of see the consolidated area where we are now, why I consolidated. If I look to the left of the chart, look at it, verifies my consolidation zone. These are hourly candles. Look at how long it was consolidating in this real shitty zone until it finally broke out, and there's your double bottom. There's the one bottom, There's your neckline, there's your double bottom, there's your candle close above it, and then there's your next push. Now we're coming right back down into here. If we're looking for a nice swing buy, maybe if we close green above here next week, like if the hourly candles can push above here, maybe come back down and then make like this move, that might be a nice buy at 23.40 to take it back up, but we're nowhere near that. Okay. Now there's a little bit of a recovery here. Okay, so I'm just going to place a yellow line on Bookmap. So we found good support at 23.36. I can see 50% of this leg right here. Sometimes I don't even need to use candlesticks. I can see the top of the move is right here, the bottom of the move is right here, half of the move is somewhere right here. So we're retracing right back up to half of the move, and then now I got to watch the offers to see what they're doing. We're below the VWAP still. Okay, so now we have this hourly candle that looks like a spin top, looks like indecision, 50-50 neutral. If we were to flip a coin, we would probably get heads 50 times, we would probably get tails 50 times. Okay, so can we really confidently take a trade on just 50-50? Probably not. So we have 25 minutes to go on this hourly candle. We got to figure out where and how it will close. So what I do is I'm going to go into the 5 minutes. Yesterday, did you guys enjoy the 3-minute scalp session yesterday? Did you guys like that time frame? Guys, is YouTube are you guys chatting in here, or can you guys not chat? What's going on with YouTube? Did you guys like the 3 minutes, Mike? Yeah. Okay, I like to switch it up. Sometimes we do 5s. We'll do 1s, but I really need you guys to understand how 1 minute candles work. I'm saying me personally, if I'm in a 1 minute trade, I might be in it for 1 minute or 2 minutes. You guys got to understand that. I don't know if you guys understand 1 minute scalping could be 1 or 2 single bars. That's it. You might be in a trade for 30 seconds, 45 seconds, 1 minute, and just that's real scalping. But yesterday we kind of were watching the 3 minutes. But it turned into more of an intraday trade. But the lower the time frame, it allows me to talk more and tell you guys and educate, as opposed to just sitting on higher time frame candles. So we'll do more of that. But I need you guys to kind of understand what we're doing, and then it makes my job a lot easier. Okay, 2 minutes, yeah, we can do 2 minute candles too, Xander. I like 2 minutes as well. So yeah, 2 minutes are nice too. If 1 minutes are too fast, then like go to 2 minute. Okay, now look at the 5 minutes. We are still like it's still pushing down. If we were to do just a trend line, like starting right here, right there, right there, right there, we're still descending. Okay, you know when an airplane is coming down slowly? Descending. Yesterday we were ascending. That's why we looked for that 3 minute buy, because the structure never broke. If you go back and you look at yesterday's call and you go review those 3 minute candles, it continued to make higher lows every successive dip it did, because the depth of market was building until we finally hit that 2360 target. So right now this is the big rally that's pushing down from Wall Street on gold, and we pulled right back up into 50% here and drop it back down. We lost this, so see here, now this is where I kind of draw my red lines and things like that to dissect my 5 minute candles. Normally I have it right here, okay, at this base of support, but now I see this 50% candle. So open, close, I'm going to lower my red line right down to there. So you see now the last pullback, these green candles came right into 50% of that 5 minute candle right here at 23, 28, 29 level, and then they're pushing it right back down. So we might see now on these 5 minute candles exactly what I was talking about, those hourly candles, if we get a double bottom. So I can see that they established a good bottom here. This is kind of our neckline right now. So what I'm looking for is this leg came down, one leg down, one leg back up, neckline. Okay, we've established it now right there, and it's 50% of that candle. Okay, so that's exactly what I'm talking about every single day here. I want to reiterate that it doesn't matter the time frame. Okay, candlesticks all have the same characteristics. This could be a daily time frame, same pattern. This could be a 4-hour pattern, same pattern. This could be hourly, same pattern. This could be a 30-minute, 15-minute, 5-minute, 3-minute, 2-minute, 1 minute, 30 seconds. It's the same psychology. It came up to 50% of the mean of that volume, and now we're getting that pullback. Now, we have to figure out, are they going to come back down all the way down for a physical double bottom? Are they going to come and take the liquidity in the big green demand box in here. I might be sitting in here with a pending buy if it comes in maybe 23.20, but sometimes I don't like using pending orders. I like to use more market execution. So especially if I'm trading and I'm watching the markets. If I walk away from the computer, I might put a pending feeler buy in here and get triggered, and then when I get triggered, then I can follow it. But we might get a physical double bottom. Maybe we get right here a higher low. 50% of this green candle, which we're getting a little bit of support. So can they bring it back up and then maybe break the trend line and then close it above that red line? Then we retest it. Then we could get again green momentum to come right back up to our hourly 23.35, right up to there. Okay, so if I really want to consolidate real tight, remember this was the hourly consolidated box, this neutral. What I could do, I know it's a lot of neutral boxes in here, but I want your eyes to look that we are consolidating now here on the 5 minutes. Okay, so if I was to scalp this move from right here right up to there, I measure it. It could be an impulse breakout. It could be a candle that closes above and then retests this. If I want to take that short little scalp right up to there, that is 43 pips, guys. Look, from right here, if we break that trend line and we close above, if it comes up green, just that little move right there is 20 pips. If we go right up to there, 30. If you come right up to the top of that, that's 42 pips. If you come to that hourly, that is a retracement of 65 pips. And then it could come right back down. Okay, so that's the power of scalping. Some traders don't understand that. Like, they want the green move to come all the way up to here. Scalpers' mindset are just kind of looking for just to come right back up to this structure, which could be 20-30 pips with the way how the volume is moving right now. Okay, so again, look at, we're making higher low support right here. So I know it's a lot of lines, but I always target kind of 50% of this green candle. 50% is right there. I see a wick. Now I see that little volume below there, that fair value gap that hasn't been tapped. What I do now, same thing what I did with the hourly, same green box, I stretch it across into the future. We did this on the 3-minute candles yesterday. Okay, so if you follow what I'm doing from the daily, hourly, 5 minutes, and it's the same shit I'm doing. Nothing is changing. It's the same stuff. So now, if we continue to hold this, we might build a higher low. Now we're barcoding green, red, green. We're coming right back up to that neckline. If they bring it back down red, then maybe I'd like to see a wick come out of here in that green box and go back up. But if it's going to break, it's probably going to come down here. I'd like to see a wick here. If it goes red down there, I flip that green box red because it could come up green, and then they reject it red there again, and then they come deep down into the bigger hourly demand. Okay, so it's still kind of consolidating. If we take a buy, we're still counter trading against this move, but there is now a little bit of resistance right here being established. Like if I do a red box, then you guys will understand the resistance right here. Okay, I know it's a lot of boxes, but I'm a visual learner. I had to learn visually because this now is showing me it came right up to there and then they pushed it back down. Again, we traded in here. They pushed it right back down to the green box, came back up. Again, we were coming up nice and green, and then they pushed it right back down in the red box again. So if you really want to make it even a tighter consolidation, you could go something and bring your consolidation box. Whoops, I don't want to touch my daily low, but you could start to consolidate it right there now. Okay, you see how tight it's getting? Not the very best. And see how I've kind of trapped Bookmap inside here. Okay, so I kind of let the big boys play it out. They can accumulate, and then I'll kind of figure out the move and then maybe trade with the momentum. Unless you're starting a small position and then you're feeling the market out. Okay, so any questions about gold? Is there any? Did you guys understand that analysis? Because I'm going to do Dow Jones. Okay, we haven't been doing Miss Jones lately this entire week. So Miss Jones said to me, "Why are you not doing a top down on me?" So we've got to do that. But right now we'll stay with gold for 2 more minutes because we're going into 11:45. We're going to get a new 15-minute candle. So what you can also do is look at your 15-minute candles. What is the 15 doing? The 15s are making lower lows, lower high, lower low, and a lower high. So look at the 15-minute candle. It's still consolidating in here, okay? So I know I want to trade, guys. I probably not too many people trade more than me and Dave on scalping and things like that. I love to trade, but there's sometimes I got to understand that in the markets there might not be this is the time to trade. This is the time where you have to watch. Not just because it's a Friday. This could be a Tuesday afternoon and the same thing. You got to be patient and disciplined, and let the trade come to you naturally. If you find like I could force a buy right here, I could force a buy, but then the trend might still continue to push me down. I could force maybe a sell now, but maybe it's starting to build a little bit of a base in the bottom. So sometimes I just watch to see what's going on. And even if I take this like buy here, I got to still understand I'm in an hourly consolidation. That's that bigger neutral box up here. But then I know it could be shorter scalps in here. And then I got to appreciate if I grab 20 pips with minimal to no drawdown, or 30 pips. If it's just a green candle that comes up, because I got to know that it could catch a wick and come right back down. So you got to make up your mind before you even take a trade of what your plan is. If you're just thinking of your plan while you're in the trade, then you're going to second guess yourself. You're going to not know when to take profit. You're not going to know where to put your stop loss. You're not going to know where to exit the trade if you do get stopped out. Yesterday's trade, I got saved by like 4 pips where I had my stop loss. I never got triggered because I put it below structure, and it ended up going to the target. So right now this is a new 15-minute candle. It's 11:45. And see, we're still inside this box. You could get a blowout candle that kind of impulsively breaks out here, and then will come right back in. So if you're trading impulse candles, you have to know, what are you doing with it? Are you going to get in and get out? Are you going to hold it even if there's a wick and a rejection? Some of you guys, if you're on the sidelines, I recommend that you wait for candle bodies to close. If you really want to see what's going on this candle, you go down to the 1 minutes. And we can physically watch the 1 minute bars. These are the 1 minutes. So the 1 minutes came right up to here, to the resistance, to that 5-minute red box. Then they push right back down to the green box. They're building the higher low. So this is a 1 minute breakout right now on the new 15-minute candle. Here it closes in 1 second. It made a new high, okay? It made a physical new high on the 1 minute. 50%, if I wanted to mark 50%, that's a big body 1 minute candle right where my cursor is. If it pulls back into here, it could come back. Now it's respecting this and our trend line. Will it come and tap the trend line and get rejected and come back down to retest 50% of this body? Or is it going to continue to build and break out of here? Okay, so these are on the 1 minutes. Yeah, DXY is selling right now. We're down to 105.84 on DXY. DXY just made like a double top at 105.91. If you're looking, there's an M top on DXY. But DXY could just be pulling back right now, and then find some support and go back up. So these are the 1 minutes. I'm going to stay focused on that 5. Okay, so the 5 is impulsively breaking out right now. 3 more minutes to go on this candle. Okay, so there's now, see the rejection? So if we jumped in on that 5-minute candle, we got rejected. Okay, this might turn into a shooting star and come back down, and then we're coming down to the green box. And then if you took that impulse, you're in a little bit of drawdown right now. If you follow the 1 minute candles, okay, the 1 minute candle, the first 1 minute of the 15-minute candle was a fake out. It came up there, faked out the market, and we came right back down in. Okay, so now I'm not in a trade, so I'm still going to physically watch and get clues from the market, and I've trained myself too. If this was an impulse candle and it went up green, green, green here, then I know that, okay, I missed out on a trade. But I don't always look at trading like that, the woulda, shoulda, couldas. Because right now I didn't take a trade, and if I did, I would probably be in a little bit of drawdown here. If it came down like a shooting star candle, then it's coming down here, then I'm saying to myself, why did I take that impulse candle? If you allow your emotions to take over every single day, you're going to struggle in these markets. So make a plan and don't worry what could have happened or what should have happened. Just stay solid to your plan. If you tell yourself, I'm waiting for the body to close, then that's your plan. Forget about what could have happened or what should have happened. Wait for the body to close. It's that simple. Stop overcomplicating these things for yourselves, but continue to watch what's going on. So it dipped down. Did it break a new low? No, it's a higher low. We still got some green volume that might come back up and close above here. So then keep analyzing, keep reading what's going on in the market. Okay, so it hasn't really, the sellers pushed it down, but the buyers are still there. They're still accumulating. You can see in Bookmap, they're building, they're asking to trade right back up to this resistance. We're coming right back up to that 50% level, which is right here of this big 5-minute candle that came down at 11:15. So we're trading right back into it. So this candle now is going to close in 60 seconds, this 5-minute bar. Will we close back above there? We're still below the trend line, if you guys use trend lines. And then this is also the second leg coming up. So we got that one leg coming down. This is the second counter leg coming. Will we actually get that push down into that green box? That might be a good pending buy opportunity there. Or maybe if it comes down there. But maybe if it closes above, we might just pull back into this and we make that green, and then we could be making our way up here. But it's going to depend on where this closes. Okay, 30 seconds. I always say, even with the 3-minute candles yesterday, watch the last 30 seconds. Okay, this is 25 seconds to go. Who will have the momentum? Will the buyers close it strong right near the end? Will the sellers push it down right near the end? Look at the volume. How high or how near will we close to the high of the candle, to the wick? Are we going to close right near the high? Are we going to get like 50% from the high? All of these things, okay? Volume analysis. Here's the close. We're right back closing right below here. We didn't really close above here yet, okay? So it opened. Is it ignited? It is. It started ignited, but we got to fill that wick, okay? And then I can see right here, the previous zone right here, the bottom of that pivot body right there, 2330. That's where it could come right up to and then push right back down. I'm still on the sidelines right now. I'm still on the sidelines. And then right after this, guys, we're going to do the Dow. Look at the cumulative volume delta on gold. Okay, it picked up a lot. Now we're positive 1300. Okay. So what I'm waiting for is, see these pending orders in the market? There's some nice pending orders that maybe are waiting to get filled down here. This is the breakout, maybe to test right up through here, which is a nice move. But I'm still waiting for a pullback, and I know I'm going to probably miss out on this move. That could come right up to that red line, like from where this candle started up to there. That's about 15 pips. I might miss out on that. That's okay if I miss out on it. What I'm waiting for maybe is more of a pullback, and then if it gets respected, then comes back up, then maybe I want to buy that and then get that the extended move. But I might miss out here. Okay? And that's okay. That's okay with me. It might not be okay with you. And say, Ron, oh shit, you missed out on a candle. I understand that. Maybe I did. Okay, but I could be waiting for that second pullback to confirm the volume. Like, look at it. There's pending orders waiting right here, pending orders waiting right here, pending orders waiting right here. Maybe I want to fill up with these orders as opposed to be the price discovery. You guys understand what price discovery is? I know when we talk about price discovery, that's all-time high talk because we don't know what happens up there. But if you're buying the high of the candle, you're the first one to do some price discovery up there. So maybe allow the market to discover what's going on up here. And then if you get that natural pullback, then you might be buying the pullback with limited to no drawdown and get a nice fill, and then take it up with more volume. Okay, but this is a nice move coming right up to there. So that kind of came right up to this target, which was previous support. Now it's acting as resistance. So this is now what I look at. This is the first candle body that is breaking the trend line. We had a break right here, but then when it closed back below the trend line, and then they pushed it down. This candle broke above the trend line, and then it closed below again, and then they dropped it down. We're coming right now up again with the first candle with positive volume still, but we have 2 more minutes to go. So where will it close? Will it get rejected and come back down in here? Or will this be our first candle that actually closes with 5-minute volume above this trend line? Okay, so that's also what I'm watching for. Maybe if I missed out on this move, I'm still watching, which could bring me to a bigger move. Okay, does that make sense, guys? Like these were breakout candles that came up there and then they rejected it back down and pushed it back down when it closed. This was another bullish candle came up just exactly like what we're having now, but this one's got a little bit more momentum, and then they pushed it right back down. Now we're coming right back up. Very nice candle. You know, this could possibly fill that entire zone. But now what I'm doing is, this used to be a red box. I'm flipping it green now, just in case. I'm getting myself ready in case there's a pullback. And I'm stretching it now. This is where I tell you guys, stretch it into the future. Maybe later this afternoon. Maybe there might be a pullback, and this one too. Stretch this one across as well. Okay? Just because I'm not in a trade doesn't mean I got to stop doing the analysis or my technicals. Mike, the hardest thing to do is wait for pullbacks. It's very, very hard. Believe me, I'm live in front of an audience here, and I'm watching a big green candle just move up where I wanted to buy this. You know, like it's hard for me too. But you know, look at okay. So and then I'm gonna talk to the buyers. If you bought that candle, did you do anything when it came right up to the top of that body? I don't want to be that person to come on the call and say, hey guys, didn't I tell you guys that before? If we break, you know, I told you guys up to there, maybe 20 pips, up to there was about 30, up to there was about 40, up to there. You gotta think of something, okay? Otherwise, you're still holding. Still hold it. It's a nice big body candle. Where will it close? Okay, so we closed right above the trend line now. There was that impulse break above this previous support resistance. Now let's see. It's an ignited bar, but we have a big wick to fill. It's not like a short wick. So maybe we're going to get a pullback here. If we lose this ignited body, it may pull back. It's still holding ignited. It's okay there. See how it flashed red for the first time? And then still got ignited. So even if it pulls back maybe into 50% of the body or our green box, okay, you know, it's hard here. I really want to, you know, I'm thinking in my head, I gotta buy this, but I'm still waiting for that pullback, and I might miss out. What I'm doing right now is I'm checking my spreads because I might be looking to maybe possibly trade. I got a half pip spread right now for gold. So I like to tend to look at my spreads. Make sure you have like an appropriate lot size that you're not trading with a lot size you were trading in Wall Street and now you're coming right back in. So don't do any mental mistakes. Mental mistakes can destroy you too, and it's a Friday. Sometimes you make a mental mistake. You got the wrong lot size in there. Are you doing a feeler buy, or are you going with your normal size in here? What is your plan? I'm still waiting. I'm still waiting to see if we get a pullback into our green box. This is the first candle that closed above this zone. Will they come right back down to retest this zone? I don't know yet. I'm still waiting. This bar is still kind of consolidating right here. It's still a lower high from that previous breakout. Okay, so it's a red candle coming back down. So, and then another thing too, yeah, good question, A14266. The hourly candle's closing now in 3 minutes. So maybe this is another thing what I do. If we're getting close to the hour, do I want to buy right now? Do I want to wait? This is where sometimes the market does some funny things. This is where maybe the hourly candle closes and then they're going to start a new hourly open. This is where they might come hunt for some stop losses, maybe grab some quick liquidity, whatever it is. But you have to be careful here too. So what I do is, again, if now I see where the volume is. Now it's consolidating right here. Okay, so now it's a red candle coming down. I'm looking for that retest here. Let's see if it will maybe pick up a wick. Maybe what happens if it comes back down red down here and closes down here, and next hour it comes back down red over here. Okay, so that was a nice green candle breaking out of here for approximately 20 pips. But if you're still holding because you want more and you want more and you want more, you can see right behind you, there's supply here. There's supply here. There's supply here. The overall trend is bearish. This was a nice pullback, but now maybe they're going to establish where the bigger neckline is going into the hour. Okay, so it's a big red engulfing candle coming into our green box with 1 minute and 45 seconds to go. So let's see maybe now where this thing will close, how it will close, how we go into the new hour. You know, some people love, or whether you love or you hate trading. I love technicals. Like, I love price action. I don't care if I'm losing money. There's not a day where I hate price action, because you're always learning. You're always learning. Okay. So what would I have done if I bought that candle? Would I have exited with 20 pips? You know, that's that. You got to ask yourself, what would you have done that? Would you still be in this trade? Where's your stop loss now? If you bought this candle, was your stop loss maybe below here, or is it all the way below here? When you were up there, did you go to a break even? If you did, you're probably tapped out at break even right now. So there's a lot of things we can talk about. You know, if you're still in the buy now, where do you place your stop loss? Maybe that's why you got to figure out where is kind of support. This is the big support. This could be like minor support 1. This could be support 2 down here. Okay, so this candle now is closing in 30 seconds. Let's watch the last 30 seconds of this close at 11:59 going into 12 p.m. Eastern. And then you see here that the bodies right there. That's why bodies are very important to see. So, but now what I take from it is they did break for a higher high on this leg up. So this leg made a higher high, higher low. They broke that higher high. Now it's coming right back down. So if we continue to pick up good support, good liquidity, then maybe we're going to break and come up here in the next hour. Or we're going to come right shooting back down. Then we continue to trade short with the market. Okay, there's the close. And then if I'm just looking for a red base candle from here down to the top of the green box, again, measure it so there's no surprises. From right here, if it sells down to come down there, it's about 18 pips, maybe 20 in the box. And then that's where it might find buyers and come right back up. So if you're doing some micro scalping, you got to know like what could happen. Yes, it could possibly come red down there and break and come down there, and then you play up 30, 40 pips. But then you got to know that there could be buyers waiting at the low of the day, the purple line down there. Okay, so now we're coming down. Okay, so now I look back at it is, did I miss anything out of that buy? Maybe I missed out on 20 pips, but what I have closed the trade, that's the things, guys. Those are those woulda, shoulda, couldas that you can't always just hope on. You gotta know what you're doing, what you're looking for. Okay, are you turning this trade into an intraday trade? That's another thing. That's what we did with that 3-minute trade yesterday. So maybe you're in this buy, you got your stop loss. Now maybe this is now going to turn into an intraday trade. So that's okay. That happens. You know, it happened to me yesterday too. But now if we do that, we got to continue to figure out, is it going to make higher low support? Is it going to be a quick liquidity grab and then come back up? These are the things that makes trading very difficult, okay? But you don't need to make it that difficult. Just continue to stay focused. Don't stress out. Okay, if you're not over leveraging, if you're not trading too big for your account, you shouldn't be panicking. Okay, we talk about risk management every single day. Proper risk management, I don't know if all traders follow this, is to trade with 1% of your entire account per day. So if you lose that 1%, you can still recover it. It's not the end of the world. But then do you trade with 1% of your right now on this whole trade, and then you're kind of panicking that could be your entire daily your entire daily risk? Or do you break that 1% down into maybe 5 trades at 0.2? That's what I do. And then if this was one trade, I have 0.2% in this trade. If I get stopped out, I still have a 0.8% to make up that loss. Okay. Now we could be barcoding. Now at least we can establish where the neckline is now. Okay, the higher time frame neckline is right here. So we got green volume, red volume, green volume coming right back up to that 50% of that red candle. Is it going to continue to come back up? Are we going to then break out? Then maybe we'll continue buying this. Will it come back down? Are we barcoding green, red in here for a little bit? So this held base of support if you're still in the buy. Okay, so no matter where your stop loss is, if it's below here, you're still live. Okay, it's coming right back up green. 2 more minutes to go. Will it close engulfed above this red body, or in the next 2 minutes is it going to get a wick and they're going to push it right back down? Is it going to come right back up? You know, sometimes when things are trading sideways, it's difficult to trade as well here. So it did come up green, and now they're exhausting those buyers. They're pushing it right back down. See, they're pushing it right back down. So that's a lower high. Didn't even tap into those bodies, that real volume. Lower high, and look at, we kind of, See, look at now, this is volatility. See how it came up green, back down red, back up green. Now they've trapped some buyers. They got them trapped. There they are, those little green bubbles in there. And then it came right back down to low, and then again it triggered a bid. So this is an indecision candle. It could close as a spin top, a pin bar. You know, do we want to flip a coin on this candle, or do we want to wait for, again, another confirmed candle? So that's the hardest part of trading. And that looked like a really nice green candle coming up. How many times did we have this on our 3-minute session yesterday? You know, all those 3-minute candles were coming up to that area of resistance, that hourly resistance, and finally we broke through it later on after the call. Okay, so now I can see where our zone is of resistance. Right here below that body, there's that wick. And then those two bodies now, you see how I now know where my next red zone is? Right there. Remember? Below the bodies, capture that wick. And then now I see a body to body already formed. Same area right there. Now it looks more visual. Now I can see more of a bigger pattern here. Down, up, and we're coming maybe right back down. Okay, will it be a higher low somewhere here and then pick up here and then we come back up? Then maybe I buy inside here, then we get that breakout, retest this, then we're gone. You know, that could be the move this afternoon. Will gold buy into the afternoon going into the weekend? That's another thing you got to think of. You know, a lot of news happens over the weekend, Saturday and Sunday, that could affect gold. So maybe this could be a good potential opportunity for overnight traders, swing position traders to start a good position on gold and hold over the weekend. But you and I as intraday traders and scalpers, maybe we just look at what's developing. So did we close red below here? No. This candle was a bearish spin top. Okay, so we didn't. It came up green. They pushed it back down red, came back up green again. They pushed it down red, and we closed right there. Now we're opening up green again. Will it come right back up? While everything is consolidating, guys, do you guys mind if I do a top-down analysis on US 30? Otherwise, we're probably going to stay on just gold this afternoon, and then we won't do US 30. It's up to you guys. I don't mind. I can stay on this for the next hour, but we can only go till 1 o'clock today, and that's one more hour. I have a lot of errands I have to do before going to Europe. US 30 would be nice, Tim. Okay, right after this candle, because it's coming right back up. So let's watch this candle here. But we will do US 30. Thank you, Rob Mack. I appreciate you, man. 214 viewers. Guys, if we can hit the like button. Thank you, Rob. Rafi, welcome. Thank you, bro. I appreciate you too. Thank you. Okay, so I'm going to ask you guys, is anyone trying to sell gold right now? Who is buying gold right now? And who is on the sidelines? Let's figure out where our team is at. Where's everyone at on gold? On the 5 minutes, okay? I don't want to say if you're buying and you're holding it till next week. Right now in this situation, what's going on right now? Is anyone in a buy, sell, or sidelines? Thank you, Rob. You're amazing, man. And I love your analysis. Everyone on Zoom, if you guys are looking to trade Forex, GBP USD, and things like that, Euro USD, get into the Forex thread and Discord. Rob is always in there sharing his charts. Great analysis. So if you guys want to get more into Forex, Rob is the man in there. Thank you, Rob, for all you do here too. Shout outs go to you guys. Rob, Forex Borex and gold, Scotty when he's in there with US 30, Noor in there. She's been doing great with those long holds. Everybody, guys, I love how you guys work as a team here. You know, you help me out, you help Dave out, you help Shahab, you help everybody here, guys. Thank you, guys. Okay, so again we came back up green. You know, like this is that stubborn red box. That's a stubborn resistance. It comes up green again and then they push it right back down. So it's kind of like a spring. It's kind of like coiling up, and then it's got to coil, and then it may potentially break out. But the volume, you got to understand what's going on in the market. Like the volume is accumulating right now. There's buyers who are that's why I asked the entire team, everyone on YouTube and everyone on Zoom. Some of you guys are buying, you guys are accumulating the buys. Some of you guys are selling, some of you guys are accumulating the sells, you know, and then there's traders like myself and others who are just waiting to see who's going to win the tug of war, you know. So if I don't want to join right now, I'm watching to see who will win this battle, you know. And then there might be also fake outs. Like that's what I also look for. I don't just look for who's accumulating more volume. I look for clues. Like what happens if I seen this clue where it comes down red, and then before the candle closes, it picks up a big wick and comes right back up and closes right there. Then I know it was a liquidity grab. They did a stop hunt. Then if it pulls back here, then that would be a good buy. Then I know it could possibly break this resistance and drive up to there, because now I got a clue that they took out all the liquidity down here. They hit all the pending orders. They took out all the stops down there, and then they got all the volume, and then now it might be time for the next leg up. Okay, so look for clues in the market. It's like playing a game. Okay, this is the video game of trading. You got to look for clues. Okay, look at that. That was a big bullish candle. Again, it trapped buyers up there. They probably bought up there thinking it was going to break out, and you're playing right into the supplier. The supplier is just absorbing, and then now pushing right back down. But we've got strong cumulative volume delta, 1500 positive. So maybe they're going to just come down and trigger this pending order, and then it's time to take it back up. So that's how markets work. Now it's a shooting star candle closing below here. If we start to push down here, this green box unfortunately has to turn red and see if we make our way down here. Okay, so guys, I'm not gonna sit on gold all day. We got things to do. I'm gonna place this on right over here. Gold will be right here. Now again, it can very well come back down red down here, and if you guys are looking to sell, just please be on your own here. If it comes right back up, it might come back up here. Gold might make some plays while we do US 30 over here. Okay, so just please guys, let's all be adults here. Let's all manage our own accounts. Let's all manage our own charts. Watch what's going on, pay attention. But I have to focus on US 30 and do a top down over here. Okay, so I'm sorry that I got to leave at that time, but we got things to do here, guys. Otherwise, I'll do a longer session and we'll stay like on one security, and then we'll 100% focus on it. But let's see what US 30 is doing. So do you guys want me to go to US 30 in the book? What I can do is I can leave gold right here on Bookmap, and I can talk about US 30 on TradingView. Or do you want to see how US 30 looks in Bookmap alongside with TradingView? Guys on Zoom, let me know your input. Warren, yes. User, please change your name so I know who you are. I like to know people by their names. We've got a lot of iPhones, Samsungs, and users in the group, and I have no idea who you guys are. And I want to know you guys personally. I want to know you guys. Okay. So let's do US 30. Guys, there's a new contract, okay? So for futures traders, I'm on U, okay? So it's YMU4. Do you guys know how to find contracts on Bookmap? Because the old one has expired. So you come over here, go to Help, Symbols, and then you see over here, so our codes. These are all futures codes. January is F, February is G, March is H, all the way here. So these ones have expired, like the N. Remember, I had it on M. I had the June contract over here. So now I'm on U. I'm on September's futures contract, okay? For all of the securities, for US 30, I've moved over to U4. So YM is the ticker, U is the monthly code, 4 is 2024, CBOT is the exchange. You see I have NQ, NASDAQ, U4, CME. Gold, I'm still on the Q contract. It's still moving the Q and the COMEX. So they have different contracts. So make sure you guys understand the contracts for the futures if you guys are trading futures. Okay, let's now get in. Okay, so let's make sure we are on YM. Gold I see is dropping right there. This is YM, 15 minutes, 11:30, 11:45, 12, 12:15. Is it too hot for you guys, like the heat? Do you want me to lower the temperature a little bit? Like some traders like it hot, some traders like the temperature a little lower. We can trade it, we can lower it right here. You know, it's all whatever everyone's eyes like. So I kind of like it right there. Shows me where the heat is. Key levels, let's just mark up right now some key levels. I see there's good support down here. Here, I see that was like a liquidity grab down there, still holding here. We've got resistance right here where we're trading at right now. So I'm just going to place a yellow line, just get us. So our eyes know what we're looking for in the depth of market. So right now we're getting a bullish move breaking out of our previous resistance here, and this was resistance back from 11:30, so we're getting an initial breakout right here on the 5 minutes, but it's still clearly pushing down. Okay, so I'm going to do a quick top-down analysis and go a little faster here. Okay, so this is US 30, guys. Dow Jones, completely different security, different mindset from gold. But right now, what's been developing, 50% of that big bullish candle, I see a lot of wicks still holding right there at those bodies. So I'm drawing my green zone across right now, bringing it. We're nowhere near there, but maybe next week, that might be good base of support. Where's our resistance now? Okay, so let's look over here. Here it is. Look in the past, all those wicks right there, wicks to the bodies, right there. Then it turned green, then it turned red, then we're trading right into it today. So we're trading right into monthly supply right now for US 30. Make it red, okay? And then if we now let's look at a trend line. If you guys want trends, okay, what type of trend line do we see? We see it's ascending like a plane taking off, okay? It's ascending, it's ascending, it's ascending. If you want to get more touches, but it's still ascending. If I want to do more of a trend line down here, wherever you guys want, I just want you guys to understand that we are pushing up. If I need to change the color of this, remember yellow. Okay, yellow trend line represents a daily trend line. The colors, the color scheme. Now what I look at is, let's look at some yellow lines, some daily point of interest. Right away, my eyes are looking at yesterday's volume. Open, close, half of it is right there. Okay, so that's going to be my first yellow line, no matter what I'm looking at, is right around there. Okay, yellow line. Why did Ron place a yellow line here? I'm just looking at yesterday's fresh volume. Open, close, half of it is right there. Before, now I see we broke there, it pushed it back down. Here, June 7th, we broke, and then they pushed it right back down. This day, Wednesday, June 12th, FOMC, they pushed it up and dropped it right back down. Now we have our first US 30 candle break for a new higher high yesterday and close with nice positive volume. Today now we can continue following the volume from today. So let's look at now where we closed yesterday. We closed right here. We kind of opened with a gap today. Okay, so again, focus. Look, see the gap now. Okay, we closed here yesterday. They gapped the market up, so we might be coming down to fill this gap. So I'm going to place a yellow line at the close of yesterday to see if we can fill this gap right down in here. Okay, so yellow line at the close of yesterday. Okay, 39,117, and now let's follow. So we opened up today, and it was green, 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 green. We took out yesterday's high. We made a new weekly, like daily high right up to here. So I'm going to place a purple line at our high of the day. If we do come back up here at some point, not today, but maybe next week, and then look at now look to the left. You've got massive supply still holding down. What's like open, close, 50% of this candle is kind of right up there. So you see that they're making a lower high supply and they're pushing it down. Okay, so next week, if we get some nice green volume closing above 39,000, maybe 280, we might have a bullish week to retrace right back up to here and to here. But right now, we've got a spin top candle on daily. Just like if this was a 5-minute candle. It's a coin flip right now. Like, where will this thing close? 4 hours and 42 minutes. So this might dictate where we close. So we kind of have filled the gap now down to the yellow line. But today when we opened up high of the day, they rejected it back down. We came and we made a low of the day. 39,000, like 0.50. That's a purple line right there. Okay, so now I know my range, high and low of the day. When we came down to the low of the day, they're pushing it right back up to right here. So can we flip this volume? Okay, now look at what I'm doing. I'm trapping today's daily volume. I'm placing another yellow line at the top of the volume to see if today, if we come back up and we push this red volume up, that's where we might flip. It might be power hour. And let's say there's a little bit of a flip, then we might trade up into here. Are we going to come all the way up to the high of the day? I don't know. But maybe what if 50%? From the purple to this yellow line, cut it in half. Look at it. 39,200, guys. I'm not making this shit up. Psychological number cut in half. Right there. If you don't see it, go outside and smoke a joint. Right here. Yellow line to the purple high, cut it in half, 39,200. Is this not what Ron has been saying for the past 5 years? Psychological zones. Its price action does not lie. Doesn't. I'm sorry to tell you guys this. It doesn't lie. Guys, you guys can make a good living by understanding these levels. Lisa, Ronnie teasing you with the joint. It's okay. I got right here. Lisa, where are you? Where's the camera at? Lisa, I got one for you right here. I got one already rolled up for you. I got one for you. That's for after the call. Okay, so let's go to hourly now. Hourly. Let's figure out what's going on with this crazy daily candle right here. Okay. Okay, look at now. Is this good hourly volume to be trading, or should we be speculating? Should we be getting ready for next week? What should we be doing? Or doing some small scalps on US 30 today? Okay, so lots of volatility. Look at, okay, so let's run it back. 2 a.m. pre-London. A lot of flash manufacturing news coming out of London, all in Europe. Okay, so here's London, 3 a.m. drop. They gapped it down. Look at the gap down with a bullish ignited candle. Come right back up. Inside bar 5 a.m. 6 a.m. This is pre-New York. 7 a.m. we got to start. 8 a.m. it was red, 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 red. We took out the low. We made the low of the day. Then it came right back up. Look at Wall Street. This was crazy. Okay, red, 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 red. Right back down to the low of the day. Now look, purple line, bodies, green box. Let's do this together, guys. Okay. Let's make this shit simple. It's a Friday. We got to be doing this together every single day. Look at this, okay? So that's it. That's an out. Look at it. And then 50% of this candle on Thursday, June 20th at 1 p.m. Half of that is still holding. Look at where they engulfed it right there. It came back 2 times today. The most important sessions of the day is 8 a.m. and 9 a.m. Those 2 hours. Like that's all the volume. Look at it, held there, okay? So we're still holding. Draw this zone into next week, guys. Let's see if this shit still holds above like 39,000, 39,050 psychological area. Now I can see our last few hours. When did we come up? 10 a.m. Okay, the flash manufacturing for 9:45 and 10. They came back. Maybe they grabbed the liquidity up there. Okay, it hit the high of the day and it came right back down and closed right here. Next hour, when we started, 11 a.m. Look at, we're holding this 39,200 yellow line. See that next wick right above me? And the bodies. I was going to do this, guys. I wasn't going to show you this. Okay, right here. Yellow line, and you see that first wick? That's where you draw your zone. Forget about the color right now, okay? Just figure a zone, okay? I'm going to make it neutral. Do you guys see what I did here? Please understand this, because if you understand this, you can do this on GBP USD, you can do this on Mexican peso, you can do this on Bitcoin, you can do this on anything, okay? Listen to me. That the daily point of interest, the yellow line, 39,200. That like, it's too extreme if I do that. That's like kind of exaggerating the move, okay? But I do have a nice wick right there. I'm looking at the high of Wall Street. Now, to verify this, I know backtesting sucks. Everyone says, Ron, backtesting sucks. No, it doesn't. Because look at what I'm going to do. I'm going to verify this zone by going backwards. Going backwards, and look it. I capture that volume right there at 2 p.m. and power hour on Thursday. I can continue to verify if I want. To go back and go back. Look at, see that big impulse wick break? Did I go back and bring my box all the way back there? I see that that was an impulse break. See, all of this volume above me is an impulse. Impulse. Continue to draw your zone across into the future. But what color should this be? It should be red. So if I'm going long buys on US 30, I'm going to wait for a nice green body to close above there, retest this, then we go long, okay? But right now, okay, I know it's ugly with all these wicks, but I still see what's going on. Okay, if you don't see it, go smoke a joint. There's one bottom coming back up. There's my neckline. I know it's ugly with all these wicks, but look at the volume. Now the volume is making a higher low, coming right back up. So can I get hourly volume close above 39,144? That will be that flip of the daily candle. Can we get some volume? Look, and we're testing 50% of 11 a.m. We're consolidating right now. If we can get hourly volume push above here, close above there, I'll be on the 5 minutes, I'll be on the 3 minutes, I'll be on the 2 minutes, I'll be on the 1 minutes. I might scalp it right back up, but I'm not going to come back up to here. I'm not going to come up to here. I'm not coming up to here. I'm coming right up to the top of the structure. There's body there, there's a body there, there's a body there, and there's a body there. Okay, so what I do is, this is me personally, I don't know who else does this, but I do this. So if someone tells me, Ron, who does this, I don't know who does this. I do this. I've been doing this for a long time. I don't know what the strategy is called, or it's called tape reading, line to line. Okay, so from right there, from the yellow line to fill up to that white line. Now what I do is I measure it. Okay, become a tradesman or a tradeswoman. Now you got your toolbox, you got your measuring tape, you got a hammer. We look for hammer candles. We got a hammer on our tool belt. We look for, we got a tape measure here. How many of you guys still use a tape measure when you're doing projects around the house? I do. I just always, I got a tape measure wherever I go. That's approximately 30 pips. 30, not 60, not 100, not 300, 30, 30, just to fill up there, okay? And you can pip and dip and grab your money and get out. If it breaks, it could very well break, like it broke there. That might be 35 pips. It could fill this entire range, and then the range is 55 up to there. Okay, not 550, but 55. We might continue to push right back down, but look at our rejections. We've got a rejection there, rejection there, rejection there, rejection there, rejection there, and another rejection. So we're still trading below here. If I'm trying to find my tight consolidated hourly zone, yellow tape, I can go to the yellow tape right here, but I'm going to go to the bottom of the bodies. Okay, and then I make this neutral. And then this is the zone I'm going to watch on the lower time frames. Okay. I know it's nasty today. Today's a Friday in Dow Jones. It's nasty. But we have a spin top candle that's going to close in 34 minutes. Now what I do is, are we okay on that analysis, guys? All good? Now I'm going to go down to the 5 minutes. Now look at the fives, okay? So I still have those same lines. So if the 5 minute volume comes down to right here, to this yellow line, I know that that's a daily point of interest. If it comes down to the green box and that purple line, I know it's the low of the day. Maybe that's where I look for a fake out. Maybe that's where I look for this. If it comes down red, I want to see a big red candle come down here, maybe with a wick, and it come right back up and close right there. And then that would be a nice buy, that green box, and take it right back up to there. Okay? Unless it closes red below there, and then I don't see a wick or a rejection. If I just see it close below, like this important area, come down red, close below, as it's coming up green, I'm flipping that green box red. If it gets rejected, I'm gonna be selling it back down to there. Okay, so I go from one zone to the next zone, or to one line to the next line. But right now, look at the 5 minutes. Okay, so they're just kind of consolidating in this whole hourly area. Okay, so the 5 minutes are making a little bit of something. Now I can see that they're making something. Yeah, they are actually. So I can see this area now. See, this has already been created. Okay, so now I'm kind of looking backwards. Yes, you have to look backwards to figure out where we're going to move forwards. So here was a base of support there on the 5 minutes. If someone tells me, Ron, that's not support, then I don't know how you don't see that support. Yeah, there was that little liquidity grab where they broke it down, but all the volume is closing above there, and that started that bullish move. So let's extend this and look what happened in the future. So there's the liquidity grab at 820. Colmex guys, right here, 820, and then it just kind of recovered right at 830, and then we continue to move right back up. Let's stick with this theme of this same zone and bring it across. Now we got some crazy volatility. This is 945. That big red drop came down into the big demand and came back up. Let's continue with this same zone and bring it across. There we go. There's like 50% of this candle 1145. There was the retest, and the retest still holding. Bring this now into the future. If we do pull back into here, we might be looking for a pending buy in here, okay? But right now it's trading like shit right now. These candles, green, came back down, go back up, inside. This is garbage, okay? If I was not with you guys right now, I would go outside and I'd start cutting my grass. I need to cut the grass before I go back home, and that's what I would be doing. I would go cut the grass right now. I would place an alert up here, just like this. I'm going to right click up there at that yellow line, if I can catch it over here. Okay, so remember that yellow line. If that could be a daily flip up there. So I'm adding an alert up there. I'm creating it. So I'm going to get an alert at my trade station where I am here. I'm going to get an alert at my mobile wherever I am. So what I'm looking for is to see if the buyers can continue to accumulate. If it comes up there, I'll get an alert. That's not saying I'm going to hit the buy button blindly, but I'll get an alert. It might come through there impulsively and then get rejected. Or it closes above there and retests this, then I might be looking to buy to take it back up to there, okay? So an alert is just an alert. It doesn't mean just go in blind. I could also get maybe an alert if it trades down here. And then I have to acknowledge that they're building a depth of market. So if I'm selling back from here, I might just sell from here to that green box. If it does down there, then I gotta maybe liquidate my trade, because I gotta honestly know that there's big buyers waiting. So if it comes down red, it might turn back up. Like that's why you got to understand where you are trading at, where in the structure. This is we're trading near the low of the day, and they're building something. So I can see with US 30, it's one leg down and second leg coming up. And we're in the neckline, this shitty area. They're trying to establish it. What will happen? Are we going to come back down? Did gold come back down, guys? Did gold come back down to a level of support here or here? Is it going to stay inside here? Are we going to continue to build and build and build and possibly then get our breakout through here? Okay. But right now, I would stay away from this volume right now. This is still consolidating. Okay. So I'm going to put these two side by side. Yeah, look at gold. See, gold now created our second bottom. See? Okay, so those buyers, guys, I told you, if you waited, look at it, got rejected, came back up, they pushed it down, came back up, lower high, shooting star. That was that zone fill I was talking about. I don't know if you guys want to rewind the call and listen to it. Remember what I was saying? If you sold from right there, right into the green box, pip and dip. I know it's not a lot of pips for some people. I understand that, but that candle is 25 pips. You could have dipped right out. If you didn't, and you want more, it did open red, ignited, and came down where? To the low of the day. If you didn't grab your 30 pips down there, then don't be surprised that a big green candle came right up there. Okay, that's what I'm trying to tell you. I'm not surprised at these things, because I've been watching these things for a long time. Now look at where we are. We're still consolidating in this shitty area. You see what Friday afternoons can bring? Not the greatest volume. That's why, and this is frustrating, believe me. These buyers are getting pissed off. The sellers too, when they sold that and they're getting pissed off. This is the time where, there's a lot of things that are just trading kind of sideways right now. So maybe we got to wait for new hourly momentum, some news in the market, something. But this is how Fridays trade. This is why sometimes Fridays are the most difficult days to trade, especially this time, mid-afternoon. But look at also like when we were talking about Wall Street. Wall Street was so choppy that you could get chopped up, and it's not good. So that's why I say to you guys, appreciate Mondays, appreciate Tuesdays, appreciate Wednesdays, Thursdays in the market. If you've hit your weekly goal, stop getting greedy and come and trade this garbage on Fridays. Walk away and go cut your grass. Walk away, go have a barbecue. Go outside, go to the gym, go for a walk, go fishing. Do something that can occupy your mind where you're not sitting and staring at candles all day, especially on Fridays when it's notorious where retail traders give back to the markets. Market makers are licking their chops right now when you and I are trading on Friday afternoons or Wall Street and we're over leveraged. They're licking their chops. They know that they're going to get our money. They're going to get all our money for the weekend. They're taking our money. So let's Let's be smart, guys, and let's get the money on Monday, Tuesday, Wednesday, Thursday. Let's secure the bags, and Friday we do more of an analysis to get ready for next week when we move into Monday, Tuesday, Wednesday, Thursday, where we can grab the bag again. Unless you guys have experience and you know how to navigate around Fridays. I'm not like, some of you guys have more experience than me. Some of you guys have been trading 25, 30, 40 years in the market. Some of you guys, I'm asking you guys for advice. So that's another thing. If you got experience and you know how to handle this, then you know what you're doing. But for some others, they lack the experience, and these are the days that they give back a lot. So now I just kind of fix my zone. Is this still a green box? No, the volume is down here. So I got to flip this one red and just clean up my gold chart. Okay, now I continue to watch what's going on. Came down there, came back up, red, green. This was red, 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 higher low, coming up as a hammer candle. Will this one start to break out? And again, if we get like an impulse break, it might break out again, right up to that existing red line. If you're doing some inside scalping, if it kind of breaks from there, make sure you measure up to there. That's another 15 pip pop right up to there. If it can drive, it might not drive all the way up to here, but let's just go candle by candle. Let's just start to fill our previous high. That's 25 pips. If it can go a little higher, probably 50% of that red candle, you get your 38 pips and you dip out of the market, because that's where the big supplier could be waiting. And when you go up there, you're up 30, 35 pips. Then it catches the wick, then it comes back down. Then we got to test this zone. Like, I can already see what could happen before it happens. Like, we get this move, break in there, comes right up to there. I extend this across, and then possibly it might break out with a new higher low that they swept the low, and then we drive up to that wick right there. And then I look for a tweezer top high, I look for a lower high, or I look for a new higher high, because that will dictate what happens with this zone. So if I get that new higher high break, this red box, I flip it green. The volume is above, and then drag it across. And then the next, what could happen is we either open ignited green, depending how high we close, and then it just drives, or we get the natural pullback into here, and then we buy the green box if it's respected, and then we build a little bit here, and then we're driving, and then we place our stop loss maybe below this zone, okay? Or depending on what structure is doing. That's how I trade. I trade candle by candle, bar by bar, zone by zone, and just take my time with it. And yes, I do make mistakes. Scalpers tend to make more mistakes than swing traders, because we're involved in the market constantly in 1 minute, 2 minute, 3 minute candles. Okay, so we're probably going to make more mistakes than the average trader. But you can still be a disciplined scalper. You don't have to be a reckless scalper and just. This is not casino. Okay, go to your local casino if you want, but this is business. Here, this is all business. See, US 30 is just still consolidating in here. Any move? Not really. Would you, if you sold, would you have been disciplined enough to pip and dip there? If you bought, were you disciplined to pip and dip? Probably not. So then, don't be trading in here if you don't have that mindset. Just continue watching what's going on. Okay. Rob, SpideyBot, Dow long, US 30, 39,130. 39,130. Okay, so 39,130 is right here. Rob, I'm just going to bring it a little higher to 135. Just watching those wicks. But yeah, we got to buy SST Scalper SpideyBot 130. Okay, right in here. But I'm just going to continue to watch just a little, maybe five ticks above at 135. Okay. But thanks, Rob, for giving the heads up. Guys, that's awesome. If you guys can give me a couple heads up, if you guys see anything, you let me know. And then you see gold is still kind of pushing down. Like the buyers brought it right back up. Tweezer top highs, lower high, pushing it right back down. There's probably bullish divergence on the RSI. If I can look right over here. Yeah, there is. Okay, so the strength of RSI keeps increasing. It's making a higher low bottom, a higher high, higher low bottom. So there is bullish divergence, but nothing is really materializing yet. So now maybe I know that gold wants to come down and maybe liquidate in this big green box down in here. Okay, so we got a nice big bullish candle on US 30 driving right now. So this is what I want to watch. The 135 close up here. Will it close above these wicks? If it pulls back, I'm already now cutting it in half. We still have 2.5 minutes to go. But right now, I want to start to analyze half of the volume. If we pull back right there, I just cut it in half right now. Okay, so 125, 39,125. It could be support going forward. We have a nice big bullish candle breaking out. Spidey bot was 130, so it's already up 10 pips according to impulse trade. Okay, but let's see. We're breaking. Will it hold? Where will it close? Will it pull back? All of these things. And if you're already in this from maybe the build up and you had your stop loss below this green box, then you're building with this move. Then you are in profit right now. How do I choose entry points when those points are satisfied? I have a lot of criteria. I try to explain all the different entries. Like we have a webinar that's called All Types of Entries. I go over the three, it's like a 3-hour webinar. I go over the 3 entries. We could close above, look for a 50% retest. That's entry 1. We could buy the break of the previous body. That's entry 2. Or it could be close near the high and it's an ignited bar open and it just pops the wick, and that's entry 3. So there's a lot of criteria, guys. It's not just one simple method. There's a lot of criteria that you gotta have. I have like a playbook in my head that just by studying candles, I know what to expect, but I'm not 100% or 90% or 80%, but I'm above 75% accurate at times with proper risk management, so I can consistently make some money and manage my losses. But there's a lot of criteria that goes into that thing. Maybe I'll do just a specific day showing everyone the different entries, but it's not easy, okay? I'm going to state that it's not easy. You got to kind of go with the market and understand what the implications are. Like right there, that was an impulse break where we broke above those 2 tweezer top highs. It was nice. We came up to 143 and then we got rejected. So now the candle is going to close in 15 seconds. Are we closing back below the red box? Because if it does, then maybe we're going to get a red candle that comes down, and remember that 50% line right there? Then maybe that's what we're retesting. But right now, I'm going to watch how it closes. So we're still closing with some good volume. Maybe we close above those wicks. There it is. There's the gap up. So maybe we get red, a quick little flip, green. So let's see if it drives to take out that wick. And then we might push up further green. Where? To maybe the base of where that ignited red bar started at 162. So right now it's red. It didn't even break the high. So we're still consolidating right in here. Let's see if we get some buyers asking to trade US 30 back up here. Otherwise, we're going to see the liquidity, see the heat waiting to get triggered down here, here, and here, and here. And that's why I'm seeing if it will come back down. Now it's red. Will it come back down and trade into 50% of our previous bullish candle, or will it make a higher low? Okay, so lots of criteria. I'll get rid of this big red box because I have other zones here, just so this one doesn't confuse you. Okay, so now we can see. Okay, so we're still consolidating in this hourly area. We did pull back a little bit, made a higher low. We still haven't traded into maybe the 50% level, like right around here, 127. We had a couple breaks above this hourly resistance here, here, here. That's where those buyers got trapped. Then we had that nice little breakout. So let's see if we're going to start to respect this 39,550 area. Now what I look at is the depth of market below. Like here's a footprint. Here's a footprint. We've got some orders accumulating down in here. Is the market going to come down and pick up these orders and then go up? Or is this depth of the market going to slowly start coming up and building the depth of market? And then we'll get more traders asking to buy up here. Then that will be that natural breakout. Okay, so we're coming right back up now. Now this could be the 3-minute impulse move that breaks out of here. Okay, I'm going to buy here. I'm buying. Okay, I'm going to buy this breakout on US 30. Okay, I'm going to buy this breakout. I'm placing my stop. Okay, I can place my stop below that 50% line if I want a tight stop. I can bring my stop right below that yellow daily line, or I can bring my stop below those two tweezer bottom lows, depending on how much reward I'm going to take out of this market. Okay, so if I'm looking for maybe just right up to that red line, then maybe I'll decrease my stop loss a little bit. If I'm looking for the punch to punch out of that red line and then come right up to that white line, then I'll keep maybe the 1-to-1 risk to reward. Okay, but I'm in a buy currently on US 30. I'm going to measure that move. Okay, so it's already in profit, not by much, 6 pips. If it can come up to that red line, I'm looking at maybe 15, 16, 17. But then if it can get up to that hourly, maybe 25 to 30 pips up there, okay? And I'm buying an impulse, okay? I want to make that clear. I'm in an impulse candle. So also I need it, if I'm staying in this, I need to know if it closes up here, will it respect this area? If it comes back down, then I know that the depth of market is building. So that's why I put my stop loss below the depth of market. Okay, we're coming up nicely. Maybe we're going to tap into that volume weighted average price, and that's where the seller could be waiting, and I could just come right in there and close my trade right in there. Okay, as long as we keep asking. We keep asking, keep asking. Okay, and this might be, I could go right now to a break even if I want. That's what I'm going to do. I'm going to teach you guys scalping. I'm going right to a break even. In profit there. I'm out. Okay, that's it. I just wanted that scalp right there. I'm out right up to that red line. I'm out of that trade. Okay, if you want to keep it, keep your break even, and that's just a scalp. Okay, I want to teach you guys scalping. I don't want to make this to turn into an intraday trade. It came right where I wanted it to. I don't care what happens now after the fact. This is how my brain operates. I came right up there through the yellow line right up to the VWAP, and then I don't play games. Okay, yes, I didn't get my 25 pip total, but I still got 15, 16, 17. That's good enough. I did a standard lot. That's okay right there. That was to target. That's all I want. Okay, that was a daily wage. Yes, I did waste a couple hours on this session, but for some people, they need to work an entire day to make $200. Okay, but that was an impulse trade. That's why I was quick to get in and out. Okay, because I have no verification or no confirmation that the volume closed until the candle closes. So I don't want to play those woulda, shoulda, coulda games. It went right up to that VWAP. That's why I use a depth of market. And that's why I have that red line right where that ignited red bar started, right there. And now you see the rejection. So I would have pissed away $100 of profit with the woulda, shoulda, coulda. Yes, it could still come up, but now let's look for now an official retest. Now where's your green zone? You're right here, the breakout. Bring it down to that wick. There, those bodies, and this is now your green zone going forward. If there's a pullback. Okay, right here, green. It's an ignited candle the way it opened, but the wick is it's not like if we closed right near the high, we would have a different conversation. And it opened ignited, we'd be driving right now. Okay, but it's a long look at now. Okay, so was Ron wrong for getting out of there and because they would have came to break even, and then I would have just gave away all my profit. Okay, it could also come down in here, and then I'd be at my stop or in drawdown. Okay, so when it started moving up 10, 15 pips, did you see how quickly I went to break even? Then when it came right to zone target, I got out. Okay, that's scalping. Okay, not intraday trading. That's scalping. Scalping individual bars. I want to make that clear. So I hope, Thin, you were asking me, how do I choose entry points and those points satisfied? That satisfied every single thing that I look for. Okay, it satisfied the way how this big bullish candle came. I've already looked at 50%. I liked how it pulled back. I liked how it broke out, popped the wick, and then I was looking for it just to fill right up to there, zone to zone. I know the 5-minute candles are smaller zones. Again, I was looking for that hourly to grab 30 pips, but when it came up there, I was satisfied because it hit the VWAP, and that's the most important thing to me because I know that the seller is waiting there. So I sold into the supply and took profit. Now, Could it continue to move? Absolutely. Could it come all the way back down? Absolutely. But I don't care after the fact. I like to look for 3 or 5 of those trades a day and hit daily goal and go out and cut the grass. If you want to now continue with this, it's now consolidating right in here. We're still now, maybe we're going to form a bullish flag, and maybe we're going to start to continue to break out a little further. Gold is still just struggling inside here. COMEX closes in another 45 minutes at 1:30 p.m. Eastern. So that's why I tend to shift focus to US 30 when COMEX market closes. Because with Wall Street, we go till 4 p.m. Eastern. Hit the likes on YouTube, guys, if you understood that scalp. Okay, don't hit the likes for making money or anything like that. Hit the like if you understood that scalp. And then that will tell me after this call that you guys understood why I took that trade, why I exited at that position, and why I don't care what happens after the fact. Okay? Guys, I have about 12 more minutes and then I got to get out of this call. I'm super busy today. My wife is going to be really upset with me that I haven't done anything. Captain J Boom, my man. Daily goal met, weekly goal met. I'm out of here. Fish and chips time. Cheers, Ron. Have a good weekend. And SST gang. Boom, my man. I want some fish and chips right now with some good tartar sauce. I go out to the lake. Boom. Lake Erie. They got fresh perch and fresh pickerel. It is so good. I can't even tell you how good it is. If anybody ever comes down to London, Ontario, Canada, Dave and I will take you out to the Cove. It's this amazing, amazing perch and pickerel dinner you will ever have. I will take everybody out. It's so good. I can't even tell you. My parents love fish and chips. I take them out there on the weekends all the time. It's fantastic. Boom, if you're ever here, I want to take you out there. Perch and pickerel, in my opinion, are the best fish to eat. Oh, wow. Especially fresh from the lake. They catch them that morning and boom. Pipping and dipping, yeah. Pips, dips, fish and chips. That's the new slogan. Pip, dip, fish and chips. Mubarak, what day do we start the lives? We go Monday to Friday. Just check the weekly schedule. That's why I tell you guys, join that free Telegram channel that's pinned at the top of this channel, because that's where we release our weekly schedule and everything like that. Okay. Now look, guys. Okay. So it's now like, look at US 30. It's still kind of consolidating in our little box here. Will it hold this support? Will we come back up? If we do build, I might take that again, that extension of another impulse move, or get something here. Kosovo ran klientat Wednesday. Se do shkojnë në Gjermani për futbollin. So Wednesday do takomoren ati. Ferizaj. Yeah, Tony, sounds delicious on a Friday. Yep. Okay, guys, so you see we got rejected there. So Ron was disciplined enough to pip, dip, fish and chip up there. Yeah, that's another thing. I made enough money to take everybody out for some nice fish and chips up there. If I didn't, then I gotta now watch it come down. So this is where you can kind of turn a scalp into an intraday trade. You know, sometimes where you want more, and then, but that's okay. If you're still in the trade, nothing really has broke down yet. It came down red, still testing our green box. We gotta see. That's why you gotta kind of give it room to breathe as well with stop loss. If you still have your stop loss maybe below 50% of this green candle, you could be still live. Okay, so sometimes you gotta give trades to breathe. Okay, so it came down red, right into our green box. We got a nice rejection. Okay, so will this candle flip into a green bar? Where will it close? So just because I got in and out of a trade, I don't celebrate, I don't clap, I don't dance. I continue to watch the volume in case I'm going to take another scalp. Okay. Jay, Perch in Walleye, Lake Erie, Cleveland, Ohio. No, over here in Ontario, Canada, Lake Erie. You're on the other side of the lake. I can get a boat and I can drive out to you, Jay, in 4 hours. But we're in Port Burwell, Port Bruce, Port Stanley. But Port Burwell has some really good perch and pickerel fishing in about 30 feet deep with some minnows. Oh man, I love perch. Okay, so we can talk fishing here and fish talk all day, but we got to talk now. We came down red. Okay, so it was red. Now we might flip. So it's still in this consolidated zone. So don't panic too if you're in a buy and you know you didn't dip out of the market. You still got to follow the structure. Okay, it's still building higher low. Green zone is still supporting. We're still holding 50% of this volume. We're still above this daily point of interest. So it's still building in here. Gold came right back up green again and they rejected it back down. This is an inverted hammer candle. So will it still build and still accumulate? And maybe we'll get that breakout. Yeah, still above the 9 EMA, Davo. See, I didn't even add any EMAs. I didn't even add any indicators on my chart. This is pure price action trading with some simple lines. But if we add EMAs, yeah, it might confirm. Let's add. Let's put the 9 on. Yeah, so we're right above the 9 EMA. You see how the 9 is directly right below my green box? So we're still, look at nice hammer candle flip. Yeah, we might get, how much time's left on it? 90 seconds, okay? So they completely flipped on those sellers. Look at where it sold down, the buyers were asking to trade up here, and look at the size of that transaction up there. That's a heavy, big transaction. So we're coming right back up to that VWAP. This might close here, and we might continue driving. And the 200 EMA, let's figure out where the 200 is. Yeah, so we had the 200 down here. We had a little bit of a crossover where the 9 crossed right at the 200. Will it continue to hold and drive? If you're still in the trade, you know, I got out early, but it might fill right up to that hourly white line. If you're still in it, that might be that 30 pip grab. Yep, there it goes. Okay, so let's see if we can get up to that hourly white line. Also, 30-second close. We created a new higher high. That's important, so don't forget that. It did create a new higher high. That can start to change the algorithm below us at the depth of market. Now maybe more bids are going to start to flood in the market when they see that a new higher high was achieved to maybe continue this trend going up. Okay. Jay, yeah, you can send pics. Add me, guys, on Instagram, sniper Ronnie _FX. Jay, I'd love to see your pictures, bro. Send me them. Okay, look at that candle. We closed right at the high at the hourly. Okay, the white line. We tapped that white line. Now look at the rejection. Look at this. This is manipulation at its finest. Okay, look at this, guys. We put the white line there for a reason. Okay, look at this shit. It closed right at the high. The candle opened. Naturally, we should have broke green. This is how disgusting these markets are. Look at this. Oh my God, I'm so happy we caught this live. Look at this. This candle was red, came into our green box, picked up all of our buyers, came and broke right to our target if you were still in. If I was still in this trade, that is a target. 28 pips to the white hourly resistance. Close right at the high. There's no wick. Normal demand. If we were at an auction, a real live auction, if we were buying fish and chips, if we were buying perch and pickerel dinners, if the perch is so good that everybody wants to eat the perch and we have so much perch to give everybody, then we should have gone up here. But the market is manipulated, okay? I'm probably going to get shut down from YouTube for saying this, but I don't give a shit anymore. The markets are fucking rigged, and this makes me sick to my stomach right here. Look at this shit, how rigged this game is, okay? I don't know how else to explain this to you guys. If you guys don't understand anything from this picture, how we marked up the zones right directly to that hourly resistance, and it closed right at the high, going into 1 p.m. Eastern, I don't know how else to explain this to you guys. I don't. Now, look at this big red heavy candle coming down. Like, do you guys understand what I'm trying to say here? Is, you know, like Fridays, this is how they tend to trade. you know, that's why you can get so upset, you can get so frustrated trading this garbage. Look at the sell came all the way right back down to the green box. Now it's coming right back up, you know, and these are big candles. Like, these are not small candles. Like, the top down to the bottom, that's a 30 pip candle. The previous one was almost 40 points. Like, this is a lot. But you guys understand why I trade like a robot? I tell you guys this all the time. I trade like a robot right to these areas. And then I don't care what happens after the fact. Because then look at what they can do to you. Like, oh man. Oh. And look at gold, still pushing down. So if you're still trying to buy gold against the grain, it's still, we haven't done anything above this red box. This red box is still there. I just moved it back a little bit to show you what could happen. And look at, they rejected it, closed as a shooting star candle and pushing right back down. Gold might break the daily low now and come down into here. Now, where could it go down to? I would just place a line at 50% of the green box, like right there. Would it come down to there? Then what I do is I verify to the left of the chart. Last time there was price action right in here. Then I look at some zones and things like, yeah, right there. See the tip of that? And then right down there. So maybe that's where I place. Now by looking back at the chart, remember what I did? I just placed that red line at 50% where I thought 50% was. Now I look, there was a rejection. There it was, it turned into push down. There was a rejection. There's a rejection. Now what I do is I verify my location and looking to the left of the chart, how close I was. Look at, okay, remember my line? My line is this one right here. That was just by guessing 50% from here to their halfway point. Now I've got verification from where it was in the past. If I want to use those two lines, I make a zone. I use from what is shown in the past and what I think it's gonna, what is half, and then make it a green box. Because then now I know if gold comes all the way back down into here, that might be a good area to buy, and then take it back up. Where? Scalp it right back up to here. You know, that's kind of how I do map out my grid. That's how I map out my charts. And then now we're going into 1 p.m. Eastern in 20 seconds. So this is where volatility tends to happen in the markets. It's always leading into the hour, after the hour, leading into a 30-minute. Like, as a scalper, you should start to really pick up on these things. Look at it. Everything happens for a reason. Time and sales. Like, look at it. They brought it all the way up to the hourly resistance, 12.55. Then they reject it. Now we got a new hourly candle. So now it's coming up green. But what I would be doing if I was still trading and still watching, 50% of this big red candle. So this red line is kind of like what I cut with. So I put it right there. That's 50%. Will it still be now resistance? And then in the next hour, if it trades below here, I could scalp it coming down there. If it still holds and consolidates in here and it wants to push back up, I'll continue going up with it. Okay, guys, I just don't leave me. I got a few things to say because I only have like a couple minutes. I hope you guys learned a lot on this session. Okay, hope you guys understand. Like right now, we're below here on this green box on gold. Flip this green to red. Like, don't stop doing this. Okay, we're still holding green here. Guys, I had a lot of fun this week. It was amazing. Okay, so next week I don't know the times that I'll be trading because I'm going to Europe for 6-7 weeks. I'm going to Germany on Sunday. So Monday I'll be at the Albania-Spain soccer game. I'm staying in Germany for a couple of days, then I'm going all over Europe. So I'll be taking my laptop with me when I can stream, if I find good Wi-Fi and a good time of day, because remember the time difference over there. So I got to figure out a good time of day because I got to do a lot of things down there, see family and relax too. It's a vacation, but I want to still stream with you guys. Maybe next week I might not stream until I get settled in, but make sure you join the free Telegram so that you can get the scheduling. Guys on Zoom, you guys will know when I stream and things like that. But hit your notifications on YouTube as well. If you guys enjoy what we do, if you're a new subscriber, hit the notifications so that if I just pop up and start streaming, you are notified. And I hope you learned something new We got a lot of new subscribers from Lorenzo's channel. Thank you. Shout outs to Lorenzo, too, doing great things for the trading community. I'd like to collab with you. Dave and I would like to collab with you and do something for both of our communities together, if you're down with that. Guys, I just want to wish everybody a happy weekend. Enjoy everything. If you guys are still celebrating Eid Mubarak to everybody. Today's my son's birthday, June 21, so I got to do something special for the little man today. But thank you guys. I had a great time. Enjoy the Euros. Some fantastic games going on. I didn't see the score behind me, but some good games. And please, guys, learn as much as you can. Okay, we have traders in the group that are doing fantastic. We just saw Captain Boom hitting daily and weekly goals, and I love it. Going out for fish and chips. That's what we got. Everybody has to strive to and get down to that. If you're struggling, okay, I know. Before we started the call, I read a couple comments. Some of you guys had a pretty difficult day in the market today, but don't keep your head up. Keep your head up. You know, I've been there. You know, we all have been there. But just work on the craft. It's a skill. It's an art of doing this. Learn your psychology. I'm not a psychologist. I can't dig deep into your brain. I try to my best ability, but psychology is everything, guys. Just if you had a shitty day in the market, go back and review the trade, see what you did wrong. Were you going against the overall market? Were you a little leveraged? Did you not respect your stop loss? Did you take an impulse trade where you should have waited for the candle to close? Were you trading news when it was too volatile? Just like all of those things. I'm sure that you can figure out what the problem was. Gold is dropping right now. See, top of the hour, new hourly things happen. New hourly is continuing push down. We just tapped into our daily low, the purple line. So let's see if it pushes down. I would already, if I was trading gold right now, I would be already with a line cutting that in half to see pullbacks. Are we going to continue to drop? Will it close above here and come back up to here? We're playing ping pong right now with US 30. That big green candle, red came down. We're coming right back up. Will US 30 continue to move in the afternoon? Look at gold. Okay, so as I'm speaking, it just dropped right down to 50% right there. Let's see if it catches a wick out of there. That like right there, it just dropped right into there. There's the wick. There could, if you had a pending buy sitting, waiting right there, you're in profit right now with 0 to no drawdown. That's a pending buy order right in that little zone. Did we not just do this 5 minutes ago? Like, you guys understand? When you learn, look at this. That's 10, 12 pips just right there. If you got triggered right in there, you're right into profit with 0 drawdown. I hope that I'm making this clear to you guys. This is live. This is not back testing. Okay. I look to the left to get information so that I can make these trades when I'm live. But this was a live candle that just came down. I showed you guys how I figured out that zone. I cut it in half. I figured that line from the past. I made a box, and that it came right into that box and wicked right out of there. So that shows you the power of these psychological zones. But it's still coming down red. Okay, so that was just one order that got triggered. Now it came back down, higher low, flip, and continue to go. So maybe the depth of market is building right around here. Now I see the last low, I take my green box and I go like that. That's it. And then now I can see critical volume, open, close. See the volatility, see the flip right there. Guys, I could spend all day with you guys. I love you guys, but I got to go because I love my wife too. And if I don't get things done, then you're not going to see Ron on YouTube or Zoom anymore because she won't be happy with this. Okay, so I got to keep everybody happy, and I got to go get my son's cake and everything like that. Thank you everyone on Zoom. I love you guys. Shout outs to Dave in Wall Street, guys. You guys are doing amazing with Dave and having a lot of fun. Shout outs to Shahab holding down London for us. Shout outs to you guys, everybody, all the moderators, admins, Rob Mack, Forex Borex, Scotty, Noor, everybody, Carlos, everybody at SST, a million names I can't even think of right now, but everybody helping out, and all of the members. I love you guys. Continue doing what you're doing. Everyone on YouTube, I appreciate all of you guys as well. Thank you for all the support. You guys are amazing, guys. Continue to like, subscribe. Whoever it was, I don't know who it was, but whoever kind of shared our channel with Lorenzo and their group, respect to you. Whoever that was, I don't know who it is, but if someone lets me know who it is, I would like to personally thank them. That's awesome. Thank you guys so much for doing that. You know, it's awesome that you guys do that. So thank you guys. Continue, guys. Have a great weekend. Trade safe if you're going to trade this afternoon. See how the markets are very erratic now, coming up back green, red. Stay away from this stuff. It's very, very difficult to trade this stuff. But have a good weekend, everybody. And next live I will be doing will be from Europe. And hopefully we got good connection. I'll be taking my laptop with me. It's going to be a little bit difficult because I'm going to be doing everything on one laptop. Normally here at my trade station, I got a few monitors. I got a lot of things going on that I can see, but it's going to be difficult, but I'll make it happen. Okay. Thanks everyone. God bless. Have a great day. Hit the likes, subscribe to the channel. Everyone on Zoom, enjoy your weekend. And everyone stay blessed. Have a good weekend. Thank you guys.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.